Okay, good morning everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boudreaux here with you this morning. Today is Tuesday, January 24th. Peter, good morning to you. Gary says, good morning, Mike. I'm back. Hope you and Jamie are well. Can you look at my old favorite, The Abomination? Thanks, Gary. Great to have you back in the room. I will add dollar-yen to the list. Not really too thrilled with where we are right now, but we will definitely take a look. Conwall, Peter, Mark, Pooja, always great to see you guys here in the room. So we want to take a quick look at the dollar index. Again, we're pretty light on dollar data until Thursday's, or I should say Friday's, U.S. fourth quarter GDP read. We have a couple of data prints before that, which we'll go over, obviously, but dollar index, sterling key, and Aussie yen from last night. Aussie in general is very interesting to me here. So we'll take a look at the Aussie crosses heading into tonight's CPI release. And then the sterling crosses. We'll hit all of those again. Sterling dollar, sterling CAD, euro pound, pound yen. I do want to touch base on dollar CAD. And then the commodities, gold and copper here for Mr. Conwall. So Conwall, the only thing I was noting to you before the session started is the high close for the year. That's your first sort of target on the upside there, but we'll take a look at copper for you. Okay, any other pairs or questions? Always feel free to throw them on the message board at any time. So let's jump right in. Here is what the relative performance looks like for the greenback heading into the US Open. Okay, here's your one-day spot return. So you can see that dollar is still seeing some strength against some of these major currencies, British pound being a decent push basically higher today, which we are favoring the long side but looking for exhaustion. So on that pound move, keep your eye on that. But the dollar kind of slumping here a little bit just below resistance at 100 spot 43. We'll look at the index in just a moment. Here's what it looks like right behind on the daily chart. Really, the intraday chart is what we focused on last night. We talked about that near-term support at 99.93, interim resistance at 100 spot 43, bearish invalidation still at 101. So even on a rally at this point into the 101 handle, you're basically still looking for further weakness in the dollar index. A critical support barrier is still down here. Now, it looks a little bit different on the intraday and daily chart. I want to show it to you here first. It's this level here, which is essentially the January high day close, converges on this slope support and the lower parallel of the current operative descending slope. So that still looks like it could take a couple of days before it gets in there. Key support is still way down here. You have the yearly open from last year, the 1618 extension, and that's 98.70 to 98.87. That's a little bit foregone, a little bit further down from here. Right now, the initial focus on 99.53. Near-term resistance, 1 spot 43. Here's what it looks like on the intraday. And here's what it looked like last night. All right, so that support did hold. The rebound went right into resistance. That held, and we're just sitting right there. So heading into the U.S. trade session, this is sort of your range of focus. I still think you could get that pop higher, guys, into that near-term resistance, that bearish invalidation level, just sub 101. I say that on account of different things. A, this is technically divergence. Price action making a lower low, the oscillator making a higher low. So right off the bat, you're seeing that the momentum signature is not quite as strong. And even if we take this into a tighter time frame, like a 2-hour chart, you're seeing that same sort of divergence on those lows. In fact, there's a trigger here that I was looking at earlier, which also is going to give you a nice governing power, because if it breaks to the upside and you see a topside break above 100 spot 43, look for that near-term pop higher. Remember, we haven't really filled the gap, so wouldn't be too outside the realm of possibility to see that gap filled before we turn lower. All right, downside move, 99.53. Again, that January high day close. Key support barrier down to that 99.98. 99.87, excuse me, 98.70 barrier. Questions on the index. Still vulnerable for pop higher if you see this thing northbound of 100 spot 43. Broader picture stays bearish sub 101. A downside break, you're looking for 99.53. That is the dollar index, number one. Okay, also on last night's update was Sterling Key, and this was actually prompted by you guys in the webinars. I'm not sure who was asking about it yesterday on Daily FX, but I thought I'd delve into it a little bit deeper. Quite interesting. I was looking for a topside pop. I haven't even checked it out this morning. Forgive me for that. I was looking for a topside pop here to get back on the short side. Looks like we went right back into the weekly opening range high, yesterday's high, and failed an overnight trade. Here's what it looks like on the daily. Actually ended up being a decent formation. So the basic premise of the trade is, look, you want to stay constructive while above the November low day close, that November reversal day close. I'm sorry, I have this labeled improperly. This is the November reversal. Okay, and that is 170.35, and that converges on the lower parallel over the next couple of days. Nice reaction that we saw to the lower parallel, again, of this descending formation, right, on these slopes to the downside. Let me zoom this out a little bit. And you can see that that rebound is now coming and turning just ahead of the 50 line here of this near-term formation. So I'm still thinking along lines with the sterling strength. We talked about this at length yesterday. If you didn't see Jamie's special report on the pound, I definitely encourage you guys to take a look at that. There's a lot of different cyclical things, a lot of different longer-term formations that are suggestive that you want to be looking for essentially a little bit bigger of a turn in the pound crosses. So with that said, I want to use this pullback to get back on the long side, as we had noted before, looking for this near-term pullback to show us some exhaustion on the downside to get back long. Constructive above 70.35. Key topside levels to keep in mind are 74.13, which we just turned ahead of. Look at the lows from back here, back in November. 50% retracement of the decline off that high and the 50 line, or the current operative slope. And just above that, 75.50. Key 618 retracement. Then you have that upper slope again and the 100-day moving average. All converge in this little pocket. So I love the upside targets. I do think you want to look to use this pullback to get on the long side. Right now we're just trying to gauge how deep it cuts to the downside. Here's what it looks like on the intraday charts. And here's what it looked like last night. So we had this sort of near-term slope to the upside, really, really sharp. I don't really like working too aggressively with these, but the basic premise was look for failure ahead of 74 for a pullback. And then again, we're looking for long entries while above 70.35. That November, excuse me, that was labeled wrong. The November reversal close. So you got the break, okay? And in fact, you had a really decent trigger in near-term price for those of you who are trading in overnight to give you that downside move. We're now looking for exhaustion on the downside move to give us entry for the longs. Okay, here's what it looked like on the 60-minute chart. And here's what it looks like now in the 60. So now that we've made a basic break of the initial opening range, you want to just tack on a quick retracement. Just want to see if that 38.2 just caught that low, just below it. And if you do that, look what comes up. Super interesting. Guess what? The 618 retracement of that advance comes up right at that same level that we were looking at, 70.30, 70.28. So, you know, big region, okay? And I'm looking for long entries before or ahead of this key level. How do you play that from a scalping standpoint? You have to wait for the turn. If you're holding a short off of that break last night, this is your first target. This is your second target. As soon as you hit 71.51, I'd be bringing my stops to break even or better. Near-term resistance now is at the weekly open, which is just above 72.51. Okay, so if it pops higher, that's when you want to look for near-term resistance. And both of these are levels of interest for me for possible entry on the long side. Okay, let's see if we can't get some structure to the decline, something to give us an indication to try to pop this higher. At the end of the day, top side targets remain unchanged. If we plow through 74.10, again, 75.50, big initial area of interest. Again, that's this. And then up into that 77 handle. This is actually the 2013 low. Excuse me, this is actually the low from, what was that, July of last year, and the 2013 low. 77 handle. Any questions on pound Kiwi? Broader picture is constructive, looking for long entries on this move lower in near-term price. Keep in mind, you do have CPI figures coming out of New Zealand tomorrow. We are expecting a nice uptick there. So for the Kiwi in and of itself, which is holding resistance versus the dollar right now, you know, if we do see a pullback in the Kiwi, that could further fuel the upside that we're looking for here in pound Ki. Depends how, what reaction we get to that CPI data tomorrow. Here's a real near-term picture, by the way, on pound Kiwi at the current levels that we're trading at. I do want to just note again, heading into the U.S. trade session, you know, off of this rebound that we're seeing right here, you know, here's some divergence in near-term price on the 5-minute. Even if you look at this on the 1-minute, again, holding those lows in near-term divergence, could see a little bit of a pop higher. The risk is still for a new low in my assertion here before you start to make any significant progress to the upside. Okay, moving right along. Number 2, that was Sterling Kiwi. Aussie Yen, number 3. So Aussie Yen, Pooja, this one, every time I look at Aussie Yen, I'm thinking of you for some reason. I know your love for this trade. It's finally starting to move, I guess. You know, we've been trying to track this lower for some time. We've gotten actually some really great plays off the short side, off the median line ever since the start of the year on every subsequent rally and rejection of that. We did get one material close above, but those days, both of those days, both on the 19th and the 20th, failing at last year's December high day close. That comes in at 86.93. So you got the pullback, you got a gap on the Sunday open, tried to fill that gap, collapse lower. I still think you'd look for support down to 85.17. Now there's another level just below that into 84.85. I'll show you in the intraday chart in just a moment. Oh, it's actually right here. But the long and short of it is, I think the risk is still a little bit lower near term, and then you look to possibly look a reaction off of this region. If it breaks 84.85, I think this thing falls apart. But as it stands right now, you know, I would actually be looking for a little bit more of an assertive rebound off that region. Long and short of it is the risk is still for the downside below 86.28, bearish invalidation 86.82. 86.82, by the way, is now the 2016 high day close. Okay, so the daily chart. Again, just keep this in mind. Here's what it looked like yesterday. Okay, seeing a little bit of a bounce here. Near-term resistance 86 on the upside. Still looking for a stretch down to 85. Here's what the 4-hour looked like. Now, before, Peter, I see your request there. Pound CAD is on the docket. It's up in 2 pairs. I got you, brother. As far as Aussie Yen is concerned, listen, I don't want to really stress this formation too heavily just yet. But if you look at the wick that we made to start off the week, it turned pretty damn close to that 50 line. So the first initial reaction touch and then the comeback below the median line, you know, it has me just wanting to keep this as a frame of reference, this slope. I don't want to work too aggressively with it just yet. Here's what it looks like right now. First on the 4 hour, let's take just a step back here, give you a picture of what we're looking at. Now, I suppose if we take a retracement just of this advance, we'll find that the low may have come in, yeah, right around that 786. Retracement 85.45, but the rebound, again, as long as we stay below 86.28 near term, that's also the weekly open and the 50 line. I'm going to favor a move towards 85, towards 84.85, and this is where we should see a little bit more of a stringent reaction. Either a strong rebound if this uptrend is going to hold. Largely, we're favoring a downside move and a downside break. If you read, again, my quarterly forecast for Aussie yen, if you take it to the weekly charts, I think it's pretty apparent, and we're still on course to basically follow the the yearly forecast here on Aussie yen. So this is the chart that we published back in December. Again, the risk into the start of this year, let me drop your yearly marker here. Oops. So the risk into the yearly open right here is still for, while below 87.65 as we noted, the risk is still for a drop into slope support or structural support. That could take you down as deep as 82. Now again, it's way too early to call that at this point. We're just opening up the year, obviously. This is a yearly forecast, so we could still travel higher first, but the premise being, guys, I wouldn't be too surprised to see this thing give us the drawback first and then continue higher. Note that into this high to start off the year, what do you have? That's your sweetest divergence. These are my strongest signals. Both reference points below 70. This is a weekly divergent signal, so a little bit more weight is granted to it. Price action makes a higher high. The oscillator makes a lower high. And again, bring it into a line chart to see that clearer. Okay, so there's a lot of indications that we still could see this thing give us a little spill to the downside before it starts to continue up. And if it does spill down towards those levels into 82 or near structural support, there's a couple of parallels you can work with. I think that would be a great entry for a longer term trade, inevitably looking for a topside breach above 90. 90, 65, 91, 22 would be the first larger area of resistance that you'd be looking for, and so forth. But that's sort of the broader theme as far as the Aussie yen is concerned on the weekly. So near term, again, the daily focus right now, still lower while below 86.28, key support 85, 84.85, and we'll look for a reaction there in Aussie yen. Pooja says, looking for new shorts near 86.28. Yeah, I would be near that 50 line if this formation is going to hold. And the reason I like that is because you can have a pretty tight stop against that swing high, against the weekly open, and that basically puts a stop against 86.30. So as close as I can to that, I think it'd be an area of interest for me. Because look, even if the recent range holds, I think that level of spike into that would still offer a decent risk to reward for a pullback, even if we don't break the downside but hold the current range down near 85. Pooja, does that make sense? Keep in mind, again, I'm going to just bring to your attention, here's what the numbers are supposed to look like tonight for Aussie CPI. Okay, the quarter-on-quarter print for the fourth quarter is expected to hold at 0.7%. Year-on-year is supposed to pop higher to 1.6. Okay, so this is what the expectation is. And of course, we'll be always trading on the deviation from the expectation, not necessarily what the print is. And just as a reminder, the RBA is on tap early in February, so you've got some time still. Yeah, and there's no probabilities of any type of material hike or cut from the RBA. So all of these data prints as it pertains to CPI is not going to be as heavily weighted as they are for the Fed, which is right now essentially just waiting on inflation to really come back in a stronger force. Okay, Pooja says yes, right on. Moving right along. That was Aussie yen number 3. Again, CPI on tap later tonight. Sterling crosses. Here's a quick update. Number 4, British pound. Here's what sterling dollar looks like. So the rally, my friends, did make it through 124.33. I know we talked about that level for some time yesterday. We did make it through. It actually closed, obviously, well above and caught a target that we had talked about on the daily chart, but we didn't really have highlighted so much on the intraday chart, and that's this region. This circle was drawn here in the webinar yesterday, and if you guys remember, this is slope from basic channel resistance, extrapolated here off the lows from 2015 in March. We talked about how that purple slope had some really nice pivots and how it converged with the 100-day moving average. It's basically where we closed yesterday before coming back off to test 124.33 now as support. So as far as the pound is concerned, this could be a simple zoom and retest. One other thing I'll note, this break clearly constitutes an invalidation of the monthly opening range. Here's your January open. January makes a high early in the month. You set a low pretty early in the month on the 11th. You test the low the following week, it holds. You test the highs, you get a whip back, a break. If this is a zoom and retest, we should maintain support while above 23.80 near term. At this point, I'm comfortable bringing up the bullish invalidation level to the monthly open. Okay, it's right around 123.38. So let me highlight this for you. So even if it starts to trail below 23.80, I'm not going to necessarily be in a position, but I'll want to see the monthly open hold if this is going to basically play out like we want it to and give us the broader turn in pound dollar. Here's what it looks like on the intraday chart. Near-term price action is starting to be suggestive that that's the correct play. Even if you just look at the wicks that we're seeing in the 4-hour chart, this is what you want to see. So here's your weekly open, here's your monthly open. This is now going to be our near-term bullish invalidation level. As long as we hold above that, we like the long side of pound dollar. Top side target's unchanged at 25.90, and then 26.70 would be next subsequent top side objective. Still don't have much, structure to the advance yet. I'd like to see a little bit more of a pullback, a nice exhaustion pull to give us some structure to the advance. I don't have it, but the lateral levels have been pretty decent. So as far as pound dollar, again, to go to the previous update, okay, here's where we started the week. We were looking for a pullback to get long, ideally off of like 21.80. You didn't get it, right? It just got plowed right through. So we teetered out just ahead of that 764. We're pulling back, stay constructive above that same median line, looking for inevitably a much, much higher advance here near towards 26.70 would be a basic 236. Any questions on sterling? If you're a little hesitant to get aggressive on the pound, I don't blame you. Obviously, we have the dollar sort of doing its own thing at this point. And with that hairy range that we talked about in the dollar index kind of sitting right at support, the crosses seem a little bit more appealing to me right now. But if you put a gun to my head, still like the pound to the upside. Either way, slice it. Pete says best long entry point at time. So at the best long entry point at this time, I'd be looking at the weekly open. Where's my mouse? I'd be looking at the weekly open here, 23.80. If you get a drawdown to that region with a stop against the monthly open. Or again, Pete, as I always say, we're near term, right? So watch the intraday charts. If you get this thing coming into that median line here and it starts to settle out, or you see a long-term trigger, or a near-term trigger in momentum, it might be just worth it to take a shot to the long side. But broadly speaking, above 124.33, like I said yesterday, I think you got to like it. I think you just have to respect the fact that we're coming off of this confluence. So even if we stay and close below, around this region today, still think you want to stay constructive on this. One other thing, it's just popping at me right now. I want to see what this extension looks like. Pete says, thanks. Yeah, you're more than welcome, Pete. Okay. I'm not going to stress the 618, but 2 equal legs up off the low still gives you 2670. Oops. 2671, 2680 is the 100% extension. So even on a reference like that, just a basic 2 equal legs, you'd expect a little bit more upside on this pop if we're breaking this resistance. Again, UK GDP figures on Thursday. Here's what those are supposed to look like. Expecting to see a little downtick on the advanced read for the fourth quarter. Year on year, also expecting to see a little downtick to 2.1% from 2.2. Okay. That is British pound. Sticking with the pound CAD. So Peter, this is for you, brother. Here's what pound CAD looks like. So here's what it looked like yesterday, or I think we covered it on the Sunday update. Pound CAD. Here it is. Okay, daily chart first. Just to give you a frame of reference. So we started off on the week saying, hey, check it out. Pound CAD probably has a little bit more upside to go. I know you can't see this very clearly. But you have a little bit more upside to go in your 65.91. Just above that, you have the 200-day, the 100-day moving average. You have the August lows. Long story short, looking for a reaction off that region for a pullback to offer long exposure. And guys, it's basically the holistic theme. And I'm the first one to tell you, don't stick a theme to one pair and just take it across carte blanche on all the pairs. But with the pound crosses, generally speaking, they're all showing the same signs of exhaustion, coming in some key longer-term lows, key longer-term structural support. So we're basically want to be looking for that exhaustion pullback to give us an entry for the long side. Same thing here on pound CAD. And you're basically working against 65.90 here as the upside resistance target. Guess what? Again, this was back on Sunday. Guess what? That's exactly what we did. We did push into that key region. You're seeing you're seeing resistance in price right into that 100-day moving average, almost to the pip, and pulling right off. So I still think you can get some more downside. Largely, you want to use this pullback to get long, inevitably looking for a tag of this median line here. Basic trend line resistance extending off the highs from last year. Okay, now once we get that breakout, if we do, then we have some structure to work with. Okay, I think it's too early to stress this now, but I was looking at this yesterday. You have some nice slope here along the median line. That converges just higher right now, right at that at that channel resistance. Okay, that gives you basically 67.58 as the next topside target, broadly speaking, on the daily chart. Okay, so you're testing initial resistance, look for the pullback to get long. Here's what it looks like on the intraday. So I did add that slope here on the intraday just to highlight that region, but here's what we look like early in the week. Here's the open. And we said, look, we're looking for an exhaustion pullback to get long. We opened up the week pushing into the monthly open, which held as resistance yesterday, and it's the same game plan, guys. Only the choke targets, meaning these levels, entry for a pullback, move up. From 63.30, we'll move that up to 64.30 at this point. And bearish invalidation, or bullish invalidation, will come up to where we were earlier on that one. So basically, let's call it 63. So pull back into one of these region initial targets, you'd be looking for possible reaction levels. This is all just derived off this slope and horizontal key levels, both in pivot and Fibonacci. So if we do get a drop down to one of these targets, look for exhaustion, look for triggers, inevitably looking for a stretch into 67.40, 67.90, key region of near-term resistance. And again, on the daily chart, that's highlighted by this region. So real key levels here. I love the sterling CAD cross. I love the setup, rather, as far as the clarity of the technical setup and the levels are concerned. It's just been a lackluster start of the week on this, Pete. So I hope we can get some fuel on this downside move here so we can get in. If you got a decent trigger, which there was some triggers in overnight trade on the long on the rallying to the highs, if you're on the short, I'd be looking to hold that 264.30. Weekly open comes in just higher at 64.80. So there'd be an initial area. You'd start to take some off that short, but this is the bigger initial target of support. And actually, if you take a basic retracement at this point, you'll see that the 236 comes in right there too. Questions on pound CAD? Going once, going twice. That is number 5. Number 6 is Euro Pound. Let's just touch base on that. Here's what the old grandpa trade's doing at this point. Looks like this from back on Sunday. Right now, Euro Pound looks like this. So, in classic fashion, you're more than welcome, Pete. In classic fashion, pound, Euro Pound, doing Euro Pound things with the fake out break sub 85.92, and then the reversal, and here we are testing back that 100-day moving average as resistance. Look, this thing is the king of fake outs. It's the king of slow moving, messy trades, and it's sort of like watching a plane crash in slow-mo, because it'll be the grandpa slow mover, but it'll do that just happily through your levels. So look, we started off the week citing a downside bias. Or let me take that back. We started the week saying, look, we're coming into support. We'd like a rally into this region to get short, inevitably favoring a downside break of this slope. Is this a break, guys? This near-term slope off the low, I don't know. What I do know is that the rally that we just made in overnight trade got rejected at the weekly open. So I'm still inclined to look lower, although this near-term slope has been broken. It's only got 2 reference point touch. So I don't really want to stress this at this point. But what I do want to note is essentially, the 50 line here, the weekly open gives me 86.46, essentially into 86.55, let's call it, as near-term resistance, and that's basically exactly where this thing capped out in overnight trade. So, again, I like it lower. I do want to see this drop inevitably into 84.70 here, longer-term structural support. But as it stands right now, you just carved out a basic weekly opening range. It's Tuesday. If it breaks the upside, you have to respect the possibility for a rally towards 87. So no current operative positions on Euro Pound. Again, the slow burner here, but I think we need a little bit more clarity. I think if we get a rally towards 87, that's the clearer point, a better area of reference to work against. If you get the break again below 85.90 today, go for it. I think it's a good move back down towards that 618 retracement. Remember, the monthly open also comes in down there near 85.30. So a little messy play here, not too thrilled with it, but we'll continue to track it. Some nice slope, actually. We'll continue to track it and see how that pans out. Any questions on Euro Pound? Pooja, yeah, I think you're near resistance at Kiwi Dollar. I'll add that to the list here. Let me just get through the last pound cross. Pound yen, number 7. Not much to say here. Also, since the start of the week, there's been a lot of chop back and forth. The only thing I'm really impressed with is the clarity of the weekly opening range. You got 2 tags here, just under last week's high, clearly cut, opening range high, 142.08. Almost 3 tags here on the opening range low for the week, 140.76. and work with that, guys. I mean, it doesn't get prettier than that. Again, we'll want to tweak some of our choke targets here. You're going to want to ditch that 139.30 level. I'd be looking for more stringent support here now at 139.99, basically 140 on a downside break. Might be an opportunity to play that short. It's basically 100 pips, but basically you'd want to be looking for an inevitable topside break to get a rally towards 143.80. Again, might not do anything until the UK GDP data, but we'll see how that pans out. Also, keep in mind Theresa May is supposed to be coming here to the United States to meet with President Trump towards the end of the week. I don't expect anything necessarily on Friday to actually move the markets, but hey, it's the year of unprecedented occurrences in politics, so we'll see how that pans out or if it filters out into the markets. At this point, just watch the weekly opening range for pound yen. Again, keeping in mind that 142.45 level is really the key resistance barrier you need to cut through. If you look at the daily chart, there's a lot going on here. Alongside basic channel resistance. So the topside break there is really what should open up the floodgates for a much more substantiated rally here in pound yen. Okay, that's the last one from the reports of this week. Pound yen. Questions on sterling versus the Japanese yen. Okay, let's jump into your questions here. First things first, let me just touch on dollar CAD real quick because that's something that we have been following. Here's dollar CAD right now, and here's what dollar CAD looked like on the intraday charts as we closed out last week. So basically, we want to stay constructive above 131.88 was the game plan, citing that 133.77 level as near-term resistance. So dollar CAD basically made an exact rally into this region, pulled right back, and we turned ahead of this 31.88, okay? Or we haven't necessarily made it all the way back into that 31.88. The retracement of that advance caught the pullback. I guess let me just show you the real charts and shut up. Here's what it looks like now. Here's the pullback. So this is interesting because it's actually two equal legs down is basically the low you made yesterday. Basic trendline resistance caught the high that we made in overnight trade. Here's the reversal back into this near-term support. Looking for exhaustion actually from my standpoint on the near term on this pullback. Sort of lines up with dollar index maybe making another stretch into this and rebounding. I think dollar CAD has the opportunity, if it's going to mount any type of bounce off of this rally from last week, this is the area to start to look at. Again, 31.88, same level that we talked about on Thursday, being the May high, nice pivot from last week, and both of those right now converge on the lower parallel. So watch for that near-term support here in dollar CAD heading into the U.S. Open. Here's what it looks like on the hourly. So CAD strength should be getting a pullback here in pound CAD. Yep. See if we can't get that drop near 64.30. Okay. Those are the CAD crosses and the sterling crosses. With regards to your question, Pooja, on Kiwi, is it a good time for a short? Look, here's what I'm looking at for the Kiwi. Let me take a step back. I think the Aussie, like I told you, the Aussie is my favored near term. Now that's kind of also giving me a headache. I did take a stop on an Aussie short last night. It was really annoying. I'll show it to you. It is literally at the highs again. Sometimes just playing it too close to the chest. Literally got stopped out, just pips off the high before this thing finally made the move lower. It would have taken out our target. Again, timing is everything, and that's why we use proper risk management. But in any event, the premise behind the trade for the short on the Aussie is where we are here in trend. Okay, here's what it looks like on the daily chart, and I'll go to the Kiwi in a moment. Kiwi would be 10. Here's what it looks like. So remember this formation? First of all, Aussie was in this amazing, amazing pitchfork all throughout 2016, all the way into November. And remember how many pivots we got off of every parallel slope that you could extrapolate off this rally. That break was big. We've been working with this pitch ever since. Boom, boom, boom. The lower parallel wasn't the cleanest, but it caught the lows. The median line, well, it was the origin of the break, the real stretch into this last leg higher. The upper parallel is basically being tested right now. Okay, now in overnight trade, you saw a perfect tag of that initially, you know, just into the Asia Open. That's kind of where the reversal started to happen. I jumped into the short. This last spike higher is what took me out before moving lower. Still think the same thing's going on. You have building divergence here on the, what is this, the 2-hour chart, 120-minute. Series of lower highs in momentum, series of higher highs in price. That's not in and of itself, you know, necessarily going to be, you know, your tell on an entry for a short, because it could stay in that condition, like we always say, for an indefinite time period. It's the one problem that people tend to, you know, basically front-run divergence. And I guess in a way, this is exactly what I did yesterday. I capitulated myself. So even though there was a near-term trigger in momentum, long story short, we're fighting an uptrend, and trying to call these peaks is never easy. That said, I do think you're at risk for a pullback still. And while I don't want to get stubborn and just try to press a trade that's working against me, I'm still looking for signs of exhaustion. I'm still looking for that momentum divergence to hold. I'm still looking for near-term triggers in price for a move lower. So for Kiwi, I just don't like that the structure is a little bit, is not as clean, Puja. So here's what Kiwi looks like. This is the 618 retracement of the decline just off the highs that you made in November. If you take that retracement to the yearly high, the 618 lines up with the March 2015 low day close, the high day close from last July. Decent level, but you know, I just don't have the structure, as it were, for the advance here like I do for the Aussie. Here's what Kiwi looks like on the intraday. You know, you're testing this 618 region. Maybe you could probe higher again. You know, this would be sort of another area of which I'd start trying to press the shorts. But Puja, even though we're seeing divergence, even though we're testing resistance, the dollar is just, it's got to find a little bit more of a firmer footing before I start to press a short on Kiwi or Aussie, or start to basically take a long dollar position. Just hasn't been able to find much firm footing yet. Does that make sense? So what were your levels there? Let me say what you said. Kiwi at resistance, possible shorts near here. Secondly, still looking for 104.37 for Aussie Key longs. Okay, let's go over Aussie Key in a moment. Are you good on Aussie yen? Says right. Okay, so for Aussie Key, we went over Aussie dollar, we went over Kiwi dollar. That's number 10. Number 11 will be Aussie Key, which we also covered late last week. Okay, so here's what Aussie Key looks like on the daily chart. And the basic premise of the trade here, again, is that we came off that big resistance level, 105.50, and that was, you know, in line with the larger, longer-term slope we've been working with, again, on the daily chart, off of the 2014 January lows. You could probably just pre-record what I said for the last 10 webinars on this, and it'll still be the same. So we came into the underbelly of that former support, now resistance. And again, all week long, since last week, we were trying to push shorts against that. Well, that's finally starting to materialize. You're seeing that pull back to the downside at this point. Looking for 104.37 for Aussie Kiwi shorts. Let me bring you the near-term chart. Yes. To put it very simply, that would be the ideal scenario. That being the... you might need to choke it up a little bit. Okay. So that was before we made this last stretch high. So I just needed to adjust this level one bit here. Puja, watch for 104.48 as an initial soft target. 104.37 is ideal. That's a 618 retracement of the advance and the lower parallel. So if this thing is going to sort of muddle down and take a little bit longer, you're looking at, maybe later in the week on a Thursday type of stretch into this support zone. Initially on this downside, I just would be mindful of 104.48. If you're holding shorts, might be an area of which you might want to chip away a little bit of a profit, and that would be two equal legs off the high there. But yeah, 104.37 in my opinion is a big region of support for sure. Just on account of the 618, but also that slope starts to dwindle into that region over the next couple of days. Levels remain unchanged. I would near-term resistance still 104.90. Bearish invalidation, in my humble opinion, is still 105.18. All right, Aussie Kiwi. Any other questions on that? Pooja says, okay, thanks, Aaron. More than welcome. If it turns here into the U.S. trade session, look for resistance at the median line. As long as you stay below that, because you got a decent reaction last night. As long as you stay below that, I think you're all right. Okay. Let's take a quick jump into the commodities. I know Conwall's been waiting patiently here. Real quick, Conwall, which one did you want to cover first? Sir, your nat gas and copper, please. Okay. Nat gas will be number 12. Looks like this. Okay. Interesting. Okay. I still want to treat this as a range, Conwall. So it turned right ahead of that target at 312 we were talking about last week. Here's the reversal. Let me update this for you. Give me one moment, okay? You're breaking through the 50 right now. So yeah, I think you want to treat this as a range, 39.30 to 316 or 339 to 316, says Conwall. Yeah, I mean, I think you can even stretch higher even now towards 335. You have 339. Yeah, 335, 339. There's a nice pivot at 338, but yeah, I think you could stretch higher into this. The only caveat is this. I don't want to get this too complicated because I don't want to lose anyone here, but look, there's two slopes at hand that I'm looking at, this larger one, okay, then this near-term one. I don't know which one I want to give too much credence to right now. The larger one has a 50 line here that's been doing a whole lot of nothing, so I don't want to necessarily stress that. If you get rid of it, you basically would want to be looking for resistance like right here. And subsequent support targets a little bit further out down there. With obviously with this kind of reference, this would be your bearish invalidation level. So pop through 355. Now that opens up the range. I understand that, Conwall, and I typically like to give you a lot tighter levels than that. But if we take this on just a real near-term prospect, and again, this slope I like to, I do like it for a couple of different reasons. Obviously, the 50 line, nice pivot, nice pivot. You didn't get anything here, you didn't get anything here, but if you take a parallel and extend it off that low from here, caught the low perfectly here. If you extend it off this high from here, it caught this high, caught this low perfectly. So I do like this slope. At this point, you need to leave a little bit more room for the upside. I think a rally towards 335, 340 is on hand. I'd want to stay bearish, broadly speaking, sub 355. Ultimately, you need to break 312 for that run into 294. All right, so this, again, is a 4-hour. Here's what it looks like on the 2-hour. And again, here's the 60-minute. And even on this low, right, I think we talked about this yesterday. Strong divergence, right? Price action, lower low, oscillator, higher low. So see if this recovery can't give it some more upside before inevitably it turns lower. Again, critical resistance is like above this initial highlighted region. So sort of a failure, and then look for the move lower is what I would personally be looking for on nat gas. Conwall, does that help? Does that make sense? $338. Tell me what you mean by 338. I would, at this point, again, on this reset, this new sort of take we just took on it, I'd be looking at 335 and then into 340 as your initial topside levels. 330, if anything, 339 is going to be your weekly open from last week, but those are the two levels I'd be looking at near term. Okay. That is nat gas. Next up on the comm block is copper. Looks like this. Conwell says, I understand. Thank you. You're more than welcome. So this is the one, copper, I think we were talking about right ahead of the webinar, right? Look, the high close for the year comes in at 269.7. So 270 is what I wrote for you. Today's high so far is 269.5. Literally, we came into it and tagged it. So I don't know. Remember this slope that we added? And we said, well, we don't really know if it's going to be a play or not just yet. I'm going to leave it just for now, because if the pullback finds support here and rallies, then this is an operative slope with just a breakout. But if we break back below it, I'd adjust it at that point. That being said, be cautious. This could be just another test of the high here and another pullback. I don't really have a very strong opinion on copper at all. Now, if dollar rebounds as we expect, or if dollar holds its near-term support and finally gets a little bit of a reprieve before continuing lower, although the broader picture does look bearish for the dollar, if we get that near-term recovery, sure, copper pullback would be perfect off this. But as it stands right now, the rally failed at the high close. Okay, remember where we are in trend as far as copper is concerned. Really nice move to the upside. You basically failed just ahead of slope resistance after tagging it twice into the close of last year. I wouldn't be surprised to see another leg lower before we start to move. But, respect the range until we get out, Conwall. It's the same range that we were in for all of November, for all of December. The risk is to the downside sub 271 in my humble opinion near term. But we're broadly still breaking, or we're broadly still working with this being a larger breakout on a multi-year formation that gave out late last year. All right? Could see a little bit more capitulation here before we resume to new highs. He says, okay, sir. Right on, Conwall. I know it's a little bit lackluster here, man, but it pays to be patient with these. We get some really good runs on these comms, which I know that you're taking advantage of. But I think on these stretches higher near term, it's more reactionary to what's going on in the dollar. So let's take a look at gold real quick, and then we'll jump into the abomination. Pete, are you still in the room? Or was that for Gary? Here's what gold looks like. There's really no change at all to the broader outlook. Again, just to bring your attention for the weekly chart of where gold is trading, keeping in mind that we're coming into a big resistance. Still the key level of resistance remains 1218, 1219, that 38.2 retracement, huge area of confluence resistance even on the weekly charts. Heading into the daily charts, it looks like this. I do want to note that you're noticing some nice divergence into the highs. Price action making a higher high on a close basis. Okay, the oscillator making a lower high. So you're starting to see some divergence at resistance longer term. Still has the risk, in my humble opinion, for a pullback off these levels. The broader picture remains constructive above 1180, 1182, let's call it. But you know, inevitably you're looking for the breakout to here. I still think gold is pretty constructive. But again, all the sort of puzzle pieces lining up. You got the dollar index at support. Will that give out and make that shoot into 99.50, or is it going to hold? If you get the bounce, look for the pullback in gold. Again, near-term targets remain unchanged. Questions on gold? On the intraday, which we don't really follow gold too closely on the intraday, but what I wanted to do is just highlight this. You want to bring up your near-term support down to the, or up to the rather, weekly open. That gives you basically like 1208. 1218 obviously is still like a rock ceiling, and this slope is still in play. You know, you did dilly-dally through the highs a little bit, but the 50 line's been given some decent levels. The lower parallel has been given some decent levels. So look for that convergence right here near 1208 as near-term support. Again, largely speaking, you're still constructive above 1182. Questions on gold? At risk sub 1218. You want to buy a pullback near 1180 if we get that low. Okay, last but not least, end of month, no clear bias, better to side line. Conwall, I know for the commodities you're specifically looking at, I'm with you. It's not as clear. And you know, I give it to you straight. I mean, when I see the clarity, you know we're all over it. If you hear some uncertainty in my voice, it's because I think at this point, yeah, you're heading into the end of the month. This whole Trump thing is kind of like an anomaly, right? It's where it makes it hard for us technical guys to really get some clear-cut, intraday type of of plays. So I got no problem taking a little bit more of a sideline until we get a little bit deeper, clear some of this noise out, get the first week out of the way. Let's jump into February trade and get a little bit deeper into price. That said, keep your eye on the sterling crosses, man. I think that's our best bet right now. I think the commodities are just not as clear. You're going to see a lot more range bound. And Conwall, if you remember when we talked about this last week, we even cited the expectation of as much, specifically in copper and nat gas, with a little bit more of an expectation for some sideways action. For gold, I think the pullback is still something I'm interested in, inevitably looking to buy it, but with the severity, the technical significance of the level of resistance of which we're testing right now, I do think warrants some attention to gold. To the abomination for you, Mr. Gary. Great to have you back in the room, as noted earlier. Again, here's what it looks like. So I know you were away. The short bias, we were looking to play last month, didn't really pan out very aggressively until the start of this year. And then we got some hairy price action against 11.1550 again with a pop. Took a couple of days, but that close that we made on the 11th, sub 115.51. Sorry, guys. A little dyslexic here on Tuesday, but 115.51. The final close that we got below that was the confirmation to push lower. We came back, tested as perfect resistance, again 115.50, and moved off. I'm looking for a move into 111.35, 111.80. Key region. This is a 1618 extension from the decline off the highs. And this is a 38.2 retracement from the ascent off the lows. Just below that, depending on where we are in time, you're looking at the lower parallel. Now, the only problem I have with this is that the near-term price action has been a lot of chop, and we just can't seem to get a decent slope that has offered too much discipline. You know what I mean? I don't. That's not clean to me, so I don't want to touch it. What I want to tell you is this: I'm still looking for that drop near that 111.35, 111.80 level. At this point, I would have my near-term bearish invalidation at the weekly open, and that's basically just above that 114.15 level, 114.25. You know what I mean? I just want a little bit more structure. It's just not there. Let's check this out. Hold on one sec. Yeah, it's just not there. I would just be working with these levels for now. Stay bearish below the weekly open. Look for that drop near 111.35, 111.80. Initial downside targets 11.80 and 11.35. Gary, talk to me. Does that help on dollar yen? He says, yes, it does. Many thanks. All right. You don't have any divergence here, so I wouldn't get too concerned just yet of any substantiated rebound. In fact, price action did make a higher low as the oscillator did. So don't let that fool you. Same thing here. Remember, we're only looking at the closes, so yeah, I'd be looking for a near-term rebound to get back on the short side here. And then again, that lines up pretty well with the dollar index that we were looking at, sitting at support heading into the U.S. Open. Okay, guys, so if there are no other questions, I'm going to go ahead and wrap it up there. Keep your eye on the index into the U.S. Open. Again, that key range is going to be absolutely critical heading into the close of today's session. We'll keep you updated on SB Squawk, and as always, we'll be here tomorrow morning, 8:30 Eastern, same time, same place. Excuse me, keep in mind they also have Jamie's midweek strategy webinar on tap tomorrow as well at noon in New York. Till then, best of luck trading, guys. I'll see you tomorrow morning. Cheers.